Greetings, members, one and all of the Salivation Nation. It is Wednesday, October the 16th, and we're seeing, more reports about how gold looks good and silver looks better. There's a lot of salivating out there about how silver is going to look better and catch up with gold or surpass gold. But I think there's a couple of things that have to happen before that occurs. And we're going to explore that in this video. Let's take a peek. Yes, indeed. So you can see articles like this pop up that say that silver's probably going to head up over $20 or maybe even up to $25. Some people say even higher. But there's a couple of things we have to kind of take a look at before we can really move in that direction to see exactly what's going to happen. Because right now we're seeing a pretty high gold to silver ratio. And this gold to silver ratio, though it did come out from its highest in many years at 93 to 1, it is starting to creep back up there again at 85.53. There's some pressure on both metals, but especially silver, because silver is seen as a commodity as much, if not more so, these days than as a wealth preserver, as a hedge against economic instability. And that is the crux of the matter here. When you look at commodities are traded in electronic form and futures as well. And that's kind of the world that we see silver moving at right now. And I think that's part of the reason why we're seeing, in many cases, somewhat of a disconnect between gold and silver in their ratio there. Here's an article from a mining website here, and it's about a Klondike silver rush. It's about finding high quality silver, but I thought this was kind of an interesting read here, that some would say silver is sizzling right now. This is from almost a month ago when it got up to $19 an ounce. But the silver has a long way to go to catch up with gold. The real significance of the gold to silver ratio has been the subject of intense debate. There is a historic relationship between the price of gold and that of silver for centuries. In general terms, as the price of gold moves up or down, silver prices often follow. This ratio is often used by investors to determine if either of the metals is undervalued when compared to the other. So looking back a little bit of history on this, the average gold to silver price ratio during the 20th century has been 47 to 1. That is, gold was worth 47 times what silver was worth. And now that is sort of skewed a bit because the price of gold was fixed for some of that time. Over the past 20 years, the ratio has averaged about 60 to 1. And of course, during the past 20 years, gold was not fixed. So that's a more realistic, I think, a viewpoint or window that we can see the ratio of being. By the way, I don't believe we're going to see 61 for quite some time. The current ratio of 84 to 1, and now it's actually 85 to 1, is very high historically and 40% above the past 20-year average, or 79% above the 20th century average, which I don't think we should count considering that gold was fixed for some of that time. If we go much further back to the Roman times, the gold to silver ratio was set at 12 to 1, noting that the Earth's crust ratio has 17.5 times more silver than gold. So one would expect the gold to silver ratio to be 17.5 to 1. Of course, actually, no. Any realistic notion would never say that anyone should expect the gold to silver to be that, because there's a lot of different factors that play into the ratio of gold to silver, and we're seeing that play out naturally today. Rarity and abundance above or below the crust does not mean that the price ratio is going to reflect the natural ratio. All this means, based on history and availability, silver should be due to appreciate significantly relative to gold. Well, and again, not necessarily the case here, because this article continues to kind of look at where price is. You can see from the chart below the recent silver price spike from $15 to the current $18 an ounce and actually it went up to 19 earlier, but it's now below 18. It's 17 and 47. We'll look at those prices in a moment. Rise in the past 3 months. Is this the start of the next silver bull run? It could be. You can see where the prices are. And by the way, looking at throughout here, we can see the prices have, even though they've declined a lot since this big bullish period here, where it topped out to almost 50 bucks an ounce, but it averaged here around the $30 an ounce range. We have a long way to go back up to that point, but keep in mind that silver prices, the raw price itself, is higher now than it was back in this period here before 2006. But it has been languishing, and the gold to silver price, and then they talk about the Klondike Silver Corporation and other mining. If they discover high quality silver in this mine, well, that's going to be more silver on the market, and that's kind of where that leaves to be. And but also that's physical silver. There's a lot of electronic silver out there too. The physical silver, and I think that's kind of where this thing leads us to, as to what will need to change before the gold to silver ratio drops. Because there's a lot of playing around in the electronic exchange traded fund markets, the futures markets, with silver especially, and to some extent gold too. And notwithstanding that, playing around doesn't necessarily have to be illegal or nefarious in activity and action. A lot of it can be perfectly legal trades, but notwithstanding, there's also some natural and unnatural or manipulative forces at play in the markets too. You know, the silver market itself is very small and tiny in comparison to many others out there in this space. However, silver as a commodity is quite a large piece of the pie, and that silver is going to be utilized and being traded as a commodity, and you're going to see a lot of that movement in the markets for the exchange traded funds. I posted a video a while ago about how silver has really increased in its demand, all-time demand in the ETF markets, and especially as of late. Why is this, and what does that necessarily mean? To me, it means it makes it even more volatile here. And silver and charge, the supply-demand crunch after years, the opposite here. We can see where some of this silver supply, and it's fallen, and it can't get up. Of course, that's in the physical aspect of it, because, and there's reasons, I think, in part and parcel, because of this demand crunch. We've seen this, I've shown this chart in others, but there's an increase in demand in the electronic and the exchange traded funds. And so this gold to silver ratio is what we're looking at here. And gold is treated a lot differently, more so these days than ever before, than silver. So it's a much looser connection between gold and silver. And we can kind of see that in the spot price today here. As of the recording of this video, we see silver has dropped in price 2 cents, a negative drop of 0.09%, making it the loser of the day. And gold is up $9.30, up 0.63%. So that ratio is widening. So we're going to see times like this when that occurs. And you're going to see times where silver will improve performance because of the liquidity of the electronic markets. In other words, it's not really real. And that brings me back to this chart on demand. Look, it's back, it's down. Supply and demand are closely tied together. And we're seeing not only some concerns and issues, but also existing stocks of silver probably not depleted for electronics. But also, I think a lot of this is due to lack of physical demand from investors. Now, you know I hate to use that term when it comes to silver, because I don't see silver as an investment. But what are you going to call people who accumulate bars, rounds, and coins of the investment grade or style, which means three or four nines fine silver? It's going to come in the issue of eagles, maple leafs, and the like. And when you take into account the of what Eagles and Maple Leafs have been supplied to the market, yeah, they've been increasing to some extent, but you take into account all of it together, we still have not seen demand in the physical bullion increase that much, considering where things have been what's been happening and the excitement in the silver markets as of late. And it's only until we see that happen for a continual basis and increase in that demand before we see the gold to silver ratio narrow, in my opinion. And that's what it is. It's about accumulating the actual physical silver. Beautiful. That's the thing we want to see. People buy more of these to accumulate them. As traders out there, that's what you want. You want silver. And silver is best measured by the physical and how it's being invested and traded. Now, there also is some harder markets to measure are the movement of already existing above ground stockpiles of these bullion pieces here. And I know that once the price does rise, well, people are going to unload some. I talked to a friend just today who said that once it gets to $19 an ounce, they're going to unload a bunch of it. They got about 3,000 ounces to unload. And so that will be moved into the markets, not from mines or from new stocks, but from existing stocks, which is hard to kind of really measure. The Silver Institute will probably have some better insight in some of that when they come out with their next report, and it'll be very interesting to see. But in my view, I don't believe we're going to see the gold to silver ratio tighten until we see stronger demand in the physical silver markets. And I believe the exchange traded funds and the futures are artificially high based off charts, which I couldn't find right now, but in a prior video. Post your thoughts below. I would like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.